Hi guys, 5 minutes, 5 ways to save on stamp duty. This is Ruth Hobbs, one half of Urban Sister Development. You've got to the Property Sisters YouTube channel. Today I'm spilling the tea on stamp duty, like literally, and I'm going to give you 5 ways you can save your money. You may or may not know about them, but it's really, really important that you understand. Firstly, I'm going to caveat, I'm not saying this is anything to do with tax avoidance, tax evasion, or anything like that. What I'm talking about is paying the right tax for you, making sure you understand, because it's not your solicitor's responsibility to make sure you're paying the right tax. It's you to make sure that you're paying the right tax. And you can bet your bottom dollar that the HMRC is not going to come back and say, oh, by the way, you've overpaid. Here you go, here's a nice big fat check. No, they're not going to say that. In fact, they explicitly say on their website, they won't be, they're leaving that up to you. You can either claim this tax, you can either claim this reduced rate of tax or not. It's completely up to you. So that's very, very clever on their behalf. The stamp duty laws are complicated, so it's really important that, you're not the expert. You just need a top level of understanding. So I'm going to give you 5 things to think about. First one is chattels. What are they? Chattels are, you are only paying the stamp duty on your house. Pretend this cup is your house. If I shake it, oops, tea just came out. But, if you were to shake a house, curtains, carpets, furniture, anything like that is not part of your stamp duty. So if you're paying for a house, say full of furniture, like you're buying from someone who's downsizing, you can say to them, right, let's separate out all these chattels from the purchase price, and then you only pay stamp duty on that, on what's remaining. You've got to be realistic and you've got to be honest about it. So it's never a huge amount and it's always only a very small percentage, but you can talk to your solicitor about that. As long as it's fair and honest, it's cool. Another way that you can save on stamp duty, as a developer myself, I'm really, really interested about this. If I'm a company and I'm making new builds and somebody comes to me and they're purchasing a new build from me, I can buy their house with no stamp duty at all. So that's just something to think about. If you are going to be thinking about going into new builds, just think about that as an option, about buying somebody else's house, and you don't have the stamp duty liability in that respect. So that's number 2. Number 3 is, I always ask this question now, when I go and look at a house and I'm interested in purchasing, does a company own this house? Can I buy the company instead of buying the property? Because the company rate of SDLT, if I buy the company, is 0.5%, which is a hell of a lot lower than it is if I'm buying the property. Now, each individual company is completely different and there are other taxes that will apply. So you've just got to think about that as well. Number 4 is multiple dwellings relief. So if I'm buying more than one property, if I'm buying 2 or more properties, I could look at paying the average of the stamp duty across those properties. Now, I'll explain what I mean. So if I was to buy a mansion property with a cottage in the garden, for example, that could be classified under multiple dwellings relief, and I'd pay the average of the stamp duty between those 2 properties. So that could offer you a massive saving. Another saving that you could look at as well is if you're buying 6 or more properties, you can apply the commercial value SDLT option to that as well. So that's another point to kind of think about as well. Am I buying 2 or more, or am I buying 6 or more? And if we look at individual properties, they have to be self-contained. So I could look at HMO. If an HMO room is self-contained, it's got its own toilet, its own facilities, its own kitchenette, it could be classified as its own dwelling. And if you were to buy an HMO building, massive savings on that. But there are, you need to look up what it means by self-contained, and HMRC, there's quite a lot of battles going on about it at the moment online. So you just need to be really, really careful that you're not paying the higher rate in that instance and you pay the correct stamp duty rate for that. And then finally, you've got properties which are uninhabitable. So this 0.5, if you're buying a property that is uninhabitable, so that's without a kitchen, without a bathroom, there was a court case that went on 2 years ago. I know a lot of you know about this already. it means that if the properties are uninhabitable, you only pay the commercial rate, SDLT, for it, not the plus 3% rate. And I think a lot of you know what I'm talking about because you are property developers or buy-to-letters already. So that's another thing. You need to go and investigate that. What you will find is you need to take along with you some kind of surveyor to survey the property, to give you a report so that you can give that to HMRC, because they're not going to take it on your word. And it has to be in that state already. You can't have gone in and ripped out the kitchen and bathroom and then take the photographs, that kind of thing. So that's it. I mean, there are loads and bags of other things you can look at. You've got first-time buyer exemption, you've got compulsory purchases exemption, reliefs for charities, you've got right to buy, housing providers, you've got when employers buy employees' houses, they all have stamp duty reliefs. Go onto the HMR website, have a look at all the reliefs that are available to you, and just make sure you're paying the right stamp duty. That's it. 5 minutes is up. Bye, guys.